Hello, everyone. This is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today, we're going to talk about how you can get a mortgage with bad credit. Let's go straight into it. So for those of you who've been watching any of our home ownership playlists, we've kind of talked about what scores are needed, but specifically, we're going to talk about what steps need to be taken, what the expectations need to be if you look to get a mortgage or plan to get a mortgage and you don't have the best credit. All right, let's go straight into it. So there are two most common, well, really three most common home buying loans that usually people fall into place to qualify for. One is going to be FHA. Number two is going to be conventional, and number three is going to be VA. And this is a loan that's provided by the Veterans Administration that you must qualify for. Essentially an honorable discharge where you essentially still qualify for those military benefits. And we'll dive into that here shortly. So FHA is going to be the easiest route to go, to be honest with you. FHA is essentially from the Federal Housing Authority, and they are able to give you a loan depending on where your scores are going to fall into place. Most lenders are going to start that line at about 580. Okay. Now, there are some things that can be done if your score is under 580. However, you may or may not like the terms. For example, you may end up being may having to put down 10% or 15% or 20%. That may not be ideal for you. You may not like the interest rate. So those little things like that when you're under 580 is most definitely going to play a role. If you are 580 up to about 620, that's what I call getting your foot in the door. You won't have the absolute best terms available. However, you still will qualify for a home. You don't necessarily have to have the best terms just because a lot can happen in a short amount of time. Sometimes people buy a home and then 2 years later they're moving out, 3 years later they're moving out. So that 30-year commitment, a lot of opportunities will present themselves as well. Recently with the pandemic, the interest rates went down tremendously. So there are times when people was in a very good credit situation, but because of the new lower interest rates as of recently, that are now starting to slowly go back up because of what's going on in Russia. But prior to that, for about a good 18 to 24 months, it saw some of the lowest interest rate it had seen in quite some time. So a lot of people refinance. So just because you may not necessarily meet the best qualifications today, you can most definitely qualify to refinance later down the line. So just keep that in mind. Then, of course, you have conventional. Now, conventional is usually going to be anywhere between about 650, 640 and above. There are some lenders that can do a 620 conventional, a 640, a 650, things of that sort. However, the best terms are going to be at that 680 and above range. But this video is mainly about bad credit. So now me personally, I consider bad credit when you start getting into the not so favorable terms. So with FHA, you could be a 620 and get the exact same interest rate as someone with an 850 when you're buying a home. So to me, the less than premium rates is anything that's under 620. Okay, that doesn't necessarily mean anything bad because, like I mentioned, you can always refinance later down the line if you don't have the best terms, but you do have some options available. Then you have the VA loan, the Veterans Administration loan. You must have an honorable discharge, and of course, having credit in place and other small things in place as well. That said, now, I believe the lowest score you can have to use your VA benefits is 600. Okay. If there's any lenders that will go under that, of course, they'll let you know. But as of right now, I believe the lowest that most lenders will go with a VA loan is having a credit score of 620. For those who don't know, a VA loan is where it's a 100% covered loan. So the only thing that has to be taken care of is going to be your closing costs. You don't have to do a down payment and separate closing costs. So for example, typically like with the FHA loan, you have to put down 3.5%. With conventional, if you qualify, then you would have to put down 3, 3%, 5%, 10%, 15%, or 20%, depending on a lot of factors. But with VA, you don't have to put anything down. However, you still have your closing costs. So your title fees, you got to pay for your attorney. So you got to pay for transfer stamps, your portion of transfer taxes, the survey. So there's a few things that does have to get paid for. However, if you structure your contract properly, you can line things up to where the seller can cover most of that, and you wouldn't have to come to the table with anything. We've done that quite a few times here in Illinois. But either way, those are going to be your options there. We have lenders that are nationwide. So if you're ever looking for us to provide you with, a nationwide lender, or if you know someone that's looking to do business here in Illinois, then of course let us know, because we own a real estate brokerage here in Illinois as well too. And we will be expanding to some other states. So stay tuned for that information as well. Hope this video was helpful. And then of course, keep in mind, guys, just because you don't have the best credit doesn't necessarily mean that you can't do anything about it. Here at 850 Club, we give you a personalized custom game plan to show you everything that needs to be done to improve your credit score. And you also have access to our home buying course, our car buying course, our business credit course as well. So either way, if you like this video, like it, you want to share it. And as always, be sure to subscribe, as we have nothing but great content on the way. Thank you all so much. Have a great day.